You have to check this out. Tom Lee is giving his market outlook for 2025, and you can draw some great conclusions for Bitcoin from it. You can see a positive sentiment coming our way. Its price prediction for 2025 is $1, just $250,000. Bitcoin price, and if you watch the clips of him that I am about to show you, then you will also understand how you come to this market assessment. The whole video I am showing you now is AI translated. I'll also give you a little insight at the end, because what's being said here is really crucial and it's important to understand right now.
Tom Lee is the Chief Investment Officer of Global Advisors and a contributor to CNBC. This is not a Santa Claus rally. This is a Grinch rally or a Grinch sell-off. This is not a Santa Claus rally. It's not going as planned, that's for sure.
I think investors have been a bit nervous since December 18th, because of the FOMC's interest rate decision. And they're worried that the Fed might not be as accommodating as they previously thought. But I think the fundamental factors have remained intact. So for us, it's a bit disappointing, but I think it's a bit of profit-taking and some hesitation regarding the Fed. But I really think that 2025 seems to have a lot of tailwinds coming.
He discusses the financial markets, noting the absence of a year-end rally due to a weak 2021 environment. Jerome Powell's actions have caused market panic, leaving investors uncertain about future interest rates. But that definitely didn't happen. And the main reason he sees is that in 2021, the environment is just too weak on the interest and liquidity side. Plus, Jerome Powell has really done a bad job, I have to say, because he's brought a lot of panic into the market. Many investors are really uncertain right now because they don't know what 2025 will look like, how interest rates will develop, whether there will be 2 rate hikes, 1 rate hike, or if rates might not even be cut at all. I mean, that's probably very utopian and far-fetched, but maybe they'll definitely be more restrictive than expected. So people thought they'd open the money floodgates even wider, and that's the main reason why the market hasn't exploded by year-end, but is actually correcting instead. I mean, this is probably very utopian and far-fetched, but maybe things are definitely more restrictive here than we thought. So people thought they'd really open the money floodgates even wider, and that's the main reason why the market hasn't exploded by year-end, but is actually correcting instead. And we've seen that with Bitcoin, we've seen it in the overall market. But now we get to the really exciting points.
It just delays the continuation of the long-term bull market that you were talking about.
Oh, that's true. I mean, I think one of the lessons from 2024 was that we've seen times when the market is shaky and weak. We know that investors can get pretty pessimistic pretty quickly when that happens. But it turns out that all of these have proven to be buying opportunities. I don't see many signs that December was a weak month for me. It's obviously disappointing because it should be a seasonally strong period. I don't think that's just going to change in 2025. There's a lot to look forward to.
So what you thought could happen this year is being postponed. So what does that mean for next year? Let's say the first half of next year. What do you think we need to prepare for? And, with the valuations and where the multiples currently stand, keeping all that in mind, do you think it could be a really positive first half of the year?
I think one of the things we need to watch closely is what happens with CEO confidence at the beginning of next year. We know that they've been cautious over the last 2.5 years. It's really obvious when you look at measures like the ISM index for manufacturing, which has been below 50 since October 2022, and that's strongly correlated with the earnings growth of the S&P. I really think it's finally going to rise back above 50, which signals that we're back in an expansionary state. 2022 is below 50, and this is strongly correlated with the earnings growth of the SP. I really think it's finally going to rise back above 50, which signals that we're back in an expansionary state. That's what the CEOs are thinking, it's the purchasing managers. Moreover, we have an upcoming government that will ultimately be seen by the markets as business-friendly. And I think that will reignite the animal spirits again in 2021. And I think the Fed is going to come off as dovish, even as they try to figure out where the neutral position is.
So he says that the fundamentals for next year are very, very strong. I need to translate this better now, because the AI translates dovish as dove-like. In the end, that just means the Fed is going to stimulate more here, so they'll be pumping more money into the market. And more money also means rising Bitcoin prices, rising general prices for, let's say, the overall financial markets.
And I think the Fed is going to come off as dovish. Even as they try to figure out where the neutral position is, they're still supporting the markets. It's a good combination. I think the S&P could get close to 7,000 in the first half of next year, and that's a big potential.
You've made some predictions, some urgent predictions about inflation, or about the markets based on inflation. Do you think the current worries about it heating up again are misplaced right now?
I think the worries about inflation are misplaced. I know there are people predicting a revival of inflation, and for whatever reason, January typically doesn't seem to be seasonally adjusted, so we could see a rise in the CPI in January. But for me, the drivers of inflation are wages. And the Fed has said that the labor market is not in a position that's inflationary. It's the housing market. And we know that the housing market is really just catching up from the gap between market prices, which aren't that inflationary, and how the statistical adjustments affect the CPI. It has to go there. And we know that auto insurance has really skewed the CPI upward in recent years. And that's cooling off now. Unless there is a supply shock. I am not sure why we should have a second wave of inflation. For me, I think there's a downside risk for inflation in 2025.
So he gives important assessments here, and here you can really draw very, very important conclusions for Bitcoin too. Discussing inflation. S&P 500 to $7,000 next year. Currently $5,800. S&P 500 might not rise as strongly in 2025, but could still increase by 18.6%. And if we look, the SP 502024 was up 24% here, and Bitcoin went up 5 times 2001. S&P 500 may rise 18.6% in 2025. Bitcoin may quadruple with 18.6% increase. Bitcoin could reach $8,000 by 2025. Tom Lee expects Bitcoin to hit $250,000 by 2025. And if we assume that with a 24% increase, Bitcoin has quintupled, and now with an 18.6% increase, it might not quintuple again, but could maybe quadruple or something like that, then by the end of 2025, if we just follow that logic, we could be looking at a Bitcoin price of around $8,000. Tom Lee still expects that by 2025, we will see Bitcoin prices rise to $250,000. So according to his assessment, Bitcoin is expected to perform better next year. However, Tom Lee still assumes that we will see the Bitcoin price rise to $250,000 by 2025. So that also means that, according to his assessment, Bitcoin is expected to perform better next year. So in relation to the S&P, when you compare that to last year, it's clear that Bitcoin is performing better than the S&P. When you compare that to last year, it's clear that Bitcoin is performing better than the S&P 500. But if we just look at that in relation to last year, what's interesting is that Bitcoin does have a correlation with traditional financial markets. If the S&P 500 rises by 10%, Bitcoin likely won't increase as much as if the S&P jumped by 30 or 40%. But 500 increases by 30 or 40%. You can never really draw clear conclusions from that. I've obviously made that a bit clearer now. You can't really make a precise conclusion here. It's just a rough estimate, kind of a ballpark figure. So that means if the S&P 500 goes up more, then Bitcoin might also rise more. If 500 goes up more, then Bitcoin might also rise more here. If the S&P 500 goes up less, then Bitcoin will also rise less. If the S&P 500 goes up less, then Bitcoin will also go up less. But you can definitely see now why he thinks Bitcoin is going to keep rising, because he believes that liquidity is going to increase. When liquidity increases, the S increases. 500, liquidity up, S&P. If the S&P 500 goes up, then it's very, very likely that Bitcoin will rise too. And if he also thinks that there are going to be some positive events happening with Bitcoin, like for example, the Trump administration, which will also push Bitcoin further ahead, then it's pretty clear why he thinks that the S&P 500 will rise less strongly compared to Bitcoin compared to last year, like in 2025. That's 500 less strong increase relative to Bitcoin, relative to last year, than here in 2025. I hope that's not too confusing. And he's also talking about the downside risk, meaning he doesn't see a big risk with inflation coming back. And if inflation comes back, then maybe the Fed would have to pivot again and possibly raise interest rates. But he doesn't see that risk as being too serious. He sees the risk more on the downside, so downward. But he doesn't see the risk as being that serious. So he sees the risk more on the downside, meaning downward. This means that inflation could actually even go down in some cases. And that would also mean that you can definitely keep printing money, that you can clearly keep stimulating the markets, and that you can definitely pump Bitcoin up. That's actually the only conclusion I'm not so sure about whether he's right here. I could definitely see us experiencing a higher inflation range again. He's right. So I can definitely see us experiencing a higher inflation range again, whether it's this year or next year. I'm pretty sure that inflation is going to come back because that's the devil's spiral. You lower the interest rates now, stimulate the markets, boost the economy, the S&P 500 goes up, everyone cheers, Bitcoin goes up, everyone cheers, and then tada, suddenly inflation rises again. Then you've got a huge problem. But according to Tom Lee, that risk is definitely not that big. And that's why she's bullish here and is calling out the US dollar Bitcoin price. What here E.G? What is not taken into account are any external shocks, such as war or any pandemics or whatever. I mean, if something like that happens naturally, then the plan can always be ruined. But right now, I'd say this is the base case, and it sounds quite plausible. Whether Bitcoin really peaks, or if it's less than that, nobody really knows for sure. We'll have to see how things look here. But in any case, it looks really, really good for next year. We'll have to see how things look here. But in any case, it looks really, really good for next year. I'm also on the bullish side. I always say next year, but we're already in the new year. I'm still not really settled into 2025. So hey everyone, we're in 2025. But I can't say whether Bitcoin will peak at 250, 350, or maybe even less. We'll see. If you still want to buy Bitcoin, I'll drop the link to 21 Bitcoin down below. Let me quickly show you the sunset here. It's a bit cloudy back here today. Here with Bitcoin, you can easily buy Bitcoin. With the code Bitcoin Hotel, you can get up to 20% off the fees when buying Bitcoin. Absolutely recommend it. See you later, folks. Peace out.